Now, look, I've been erring on the cautious side of this so-called AI bubble, and now that stocks are crashing, I want to talk about some of them. We'll get into Palantir. I want to talk about NVDA. I want to get a little bit of the auto industry and do some comparables to Tesla and what's happening to GM, Ford, Toyota. I wouldn't even mind talking about the software companies that are out there when you're talking about PayPal and Shopify, because there's just a lot of weird stuff going on in this market environment, and I just want to take a look at the macro to give you a clerical view on exactly what's happening here. So that's a conversation you'd appreciate. Hit that like button as always, because first and foremost, I miss the old glory days. The glory days of the market were pretty much between 2010 all the way up to 2020. The pandemic really ruined us. In a lot of ways, people I don't think fully appreciate yet. A lot of people think inflation is going to fly back up. It did tick up a bit. It's being a bit sticky above that 2% area. But the fact is they're not printing helicopter any money. That money that is just drying up. And you can see it in the growth rates of companies like Amazon, all these companies. You can see going into 2020 when the pandemic hit, all this money started flying into the economy. It shot up, and then they tightened it. They brought interest rates way up, and now all of a sudden revenue growth dropped them dramatically. And even for Amazon to be growing, if you take a look at the green chart here at 10%, a company in this so-called recession that is generating over $500 billion to grow at a 10% clip is still absolutely astounding. I mean, it's amazing, which does show signs that we could potentially see a soft landing, that the consumer is still somewhat remaining strong, but it's just nothing like these glory days where you could invest and see these consistent double-digit growth rates. And it kind of kills me inside because it makes it very hard to judge what the future economy is going to look like. And I highly doubt they're going to start cutting interest rates and getting these growth or giving the opportunity for the economy to boost back up probably until sometime maybe later next year. But for right now, I mean, you take a look at like Google here, the glory days of incredible double-digit growth rates. The pandemic hits, everyone's spending helicopter money like there's no tomorrow, and then boom, tightening comes, and now we're down to like 7% growth rates. But again, Google's still an incredible company. You look at something like Meta here that finally started posting some pretty much record revenue growth that they haven't seen in a while, double-digit growth in the last quarter, but again, nothing like the beautiful glory days that we had in the past. So let's talk about some of these stocks like Palantir, because Palantir is one of these companies that I still feel is falling into that AI bubbly territory, and I'll show you some comparables with other software companies and just some of my concerns. Every time I talk about Palantir, people got mad. I think when it jumped up to that $16, $17 range, I was starting to warn people to say, hey, I'd just be real cautious here and don't chase this too much. And sure enough, I mean, it peaked, and now we're seeing like a 30% drop. I don't know if people are going to pick this up. I honestly, I'm just not playing it. I don't understand it as well, but what I can understand is some of the numbers behind it. And Palantir is a company that, is seeing declining growth. They're, getting down into the lower double digits, which is still pretty great for a company generating $2 billion. But this isn't as explosive as some of these other companies we're about to look at. But taking a look, I've been seeing a lot of comments like this. Good thing they have the buyback. They knew prices were going to collapse. So it's great they're doing buybacks. I mean, we're taking a look here that, in my opinion, this is only short term. Appreciate buying cheaper because you would have been trapped at $20+ if purchased there. Clearly, they want to buy back for cheap, hence the $1 billion in buyback. Short term bearish for August and some early September, but bullish for the rest of 2023. This is all speculation, and it's dumb to think that the company is so coherent that they knew the stock was going to drop. And the fact is these people are completely ignorant to the fact, in my opinion, that they've been diluting probably from stock-based compensation. I mean, there was about 10% dilution, a little over 10% year over year, and even taking the $1 billion in share buybacks, that really only gives them about 71, I think, million shares at a $14 price. If it dropped down to 14, so that $1 billion barely buys back, a small percentage of the total dilution that happened year over year. It doesn't even nullify itself unless the price drops well below $10. And the other thing with share buybacks that isn't that bullish is if you believe the stock is overvalued, which again, I'm not saying it's overvalued. I just err on the side of caution because of the hype. But if you believe personally that the stock is overvalued, you do not want a company buying back overvalued shares that does not benefit the end shareholder, right? So there's just a lot of convoluted stuff going on here that I find very intriguing. And I see so many comments. What the F, man? -7 to 8% day is when people lost lots of dollars. And why the F these bears seem so happy seeing people losing money? I bet 99% of these bears not gaining a damn dime, probably means dime, from the market drop. I feel they jealous and hate their life and got nothing to do, not even having a damn job, going in here to piss off people. Obviously, I think it's the inverse now of the bulls that were jamming this down people's throats. And now when the stock is actually coming back to perhaps a place of more sustainability, these people that, were bullish, or sorry, the people that were bearish are now beating up the people that were bullish, because again, you jam things down people's throat, things get very divisive between investors contemplating values, and it's just going to happen. So these are the bears, I think, finally getting a little bit annoyed here that, maybe they bought the tops and they're just not feeling too great about it. But if I can compare it to a company like Shopify, for example, we should point out that I think Palantir right now is trading at like 15 something times sales, $30 billion market cap, generating around $2 billion something dollars in the 12-month trailing, whereas something like Shopify here, if we're doing somewhat of a comparable trades for $69 billion market cap, generating around $6.3 billion in trailing 12-month, and is seeing 30% revenue growth rates at 3 times the revenue that even Palantir is. So this company is trading at what, 10 times sales or something like that. So I just find it intriguing that if AI is this true revolutionary thing, how are these kind of more e-commerce software companies that can really take advantage of AI, especially software for building websites, integrating payment platforms, and taking advantage of analytics? Shopify could obviously be said as maybe even a better AI play perhaps than Palantir if we're talking about the way we're valuing it, if we're talking about the growth behind it, because Shopify has seen a dramatic drop off in revenue growth, but to be able to grow and see an incline from the bottom of their growth rate at 15% in the mid of 2022 to now where they doubled that to 30%, again, I just find it hard to wrap my head around it because I've utilized Shopify. I have never utilized Palantir software. So maybe there's something that you guys know that I don't, that you could bake into the long-term value. Again, I'm just trying to be pragmatic, but the real bubbles that we definitely see going on are in things like NVIDIA. If NVIDIA is not a bubble that's about to burst, I don't know what is. It's harder to wrap your head around because they have they're making incredible amounts of money. The problem, however, is that the premium they currently trade for, unless this next quarter is blowout, which they're going to be posting earnings in the next week or two, I don't know why the stock is going up so aggressively. They've seen nothing but double-digit negative revenue growth rates. It just looks abysmal when you look at the revenue here, and yet the stock is just flying to all-time highs, being the golden child of the entire AI revolution. So they need to have a blowout quarter. If they do not have a blowout quarter, then they cannot justify this and sustain this ridiculous run-up. I just can't foresee why this isn't going to pull back, right? Now, in other kind of AI-related companies, Tesla's been obviously one of the forefronted companies, and I can never wrap my head around this. I made a fortune on this from 2019 into 2021. I liquidated the rest of my shares in 2022, and I've been sidelining it because I have a hard time wrapping my head around the technology that I love of self-driving and robotics, but it doesn't generate revenue, and that will always be the bull-bear case. This is primarily an auto company based on revenue and sales right now, and until they're able, as soon as they generate that first dollar of self-driving software, I will buy this thing back. I don't care what the valuation is. I will pick it up like there's no tomorrow. But right now, you're gambling at a highly speculative value on that creation into the future, and if you want to take that risk and see that upside when it comes into fruition, it's a great thing to do. You just have to understand that this is extremely volatile for those reasons, and it's better to cost average over longer periods of time because you just don't know where the stock is going. It's incredible that Tesla's been able to grow at a 47.2% on the last quarter. Like, these revenue growth rates are astounding for a company that's almost generating $100 billion in the trailing 12 month. However, the big problem here is there's something weird going on in the auto industry, because GM, if these numbers are correct, we're seeing GM start to grow at double-digit growth rates, and they are generating almost $170 billion in the trailing 12 month. So, how is GM able to do this in this much tougher market environment where auto sales are much harder to achieve? There's just something really weird going on here. Those are like record numbers for GM, right? And that's way more than Tesla's currently generating. Look at Ford. Ford is also seeing, for the first time in a long time, very consistent revenue growth numbers, and they're also hitting record 12-month trailing, right? Toyota, very similar place. This isn't something that's just unique to Tesla right now. Because Tesla's smaller, obviously they have the capability to grow that revenue growth rate a lot higher. So where Tesla will become impressive is when they start getting into the $150 to $250 billion in revenue growth. And if they can sustain like really high double digits, like in the 40s to anywhere from 25 to 50%, if they keep that up, getting into the quarter trillion dollar the quarter $1 trillion range of revenue, that's when things get real interesting, right? But for now, this isn't something unique in my opinion, and I absolutely love Tesla. I just recognize the speculative nature of the stock and the value incomparable to some of the growth rates with GM, Ford, and Toyota, right? And even with PayPal right now, I'm kind of blown away that PayPal has dropped back down to 58 and is basically retested another low here. I can't really wrap my head around it because this company has been such a steady eddy, again, from the actual revenue numbers. And again, comparable to the last decade where things were so consistent, this company is still growing in the single digits, but very consistently. They haven't experienced negative growth rate numbers. They're generating, almost 30 billion in the trailing 12 month. And, I don't know where the just valuation for this is, but a lot of investors are recognizing this as a value play. And they're going through a lot of turmoil with, insider investors, selling out of the stock, causing controversy, CEO swapping out. But this thing seems to be trading at a fairly reasonable multiple here from everything that I've looked at. Now, I could be wrong, but I'd love to know what you kind of think about PayPal. It's kind of one of these outliers, in my opinion. It was like Meta when Meta was trading at a good value. I'm obviously not really loading up on any of these right now as I continue to just stack cash and look for some opportunities as I readjust and evaluate after a real estate purchase, which I'll stop beating that like a dead horse. Obviously, I mentioned that probably too much, but I really want to get back in the game of, starting to play some of these things. But for right now, I'm just watching it patiently from the sidelines and just trying not to do anything too stupid. Don't chase anything here. The markets are very volatile. You can be patient. I think there's more value in other smaller cap companies if you're more on the speculative realm. And again, even if you like the smaller cap speculations, as always, just don't put more than 5-10% of your net worth and in those kind of more speculative investments, even like PayPal, right? Like those are smaller buckets of your portfolio where you could see huge potential upside, but just don't get too caught up into it. Don't start throwing huge money because things are dipping. Just stay cautious and always think with that long-term mindset and always cost average in volatile markets if you are a long-term bull. But I'll pass that question off to you. I'd love to know what you think in that comment section below.